down about 5.3%, talking about a buyback, talking about stores, and just, what life is like post-pandemic.
Yeah, Karen Lynch, the president and CEO of CVS Health, just now saying that the company's retaining employees, quote, quite strongly. Also questions about theft, which I thought was really interesting because we're hearing more about that at stores, not just in New York City and San Francisco, but around the country. She said that they did see more theft in stores than usual last year.
And we should point out that their results, they did post fourth quarter results that topped Wall Street's expectations, driven in part by high demand for virus tests and vaccines. We've all seen it. We've all been part of that demand, booking a $1.4 billion charge related to store closures and pairing its outlook for cash flow. So that is something that certainly has caught the attention of both investors and analysts as well. And we have seen with a lot of these companies that they are, they've been incredible build-outs, right, and expansion. And at some point, they maybe look at that and look at what are the most productive stores and outlets, and maybe you kind of, retrench and pare back a little bit. And so we're seeing some of that.
Yeah, Romaine asked about the plans for the stores to actually be redesigned to think about healthcare and focus. And it was interesting to hear what she had to say about that. I also found the supply chain comment interesting because I didn't think about this from the perspective of pharmacies. Two different supply chains, right? One focused on what you actually get in the aisles, and then one supply chain focused on the pharmacy, what you get from, behind the counter. And she said there haven't been disruptions to the pharmacy side.
Well, they've become mini supermarkets, so, right? There's food and there's just general things that you would see kind of even like in a gas station store, right? Like just those quick items that you need. But at the same time, everything when it comes to healthcare, consumer care, cosmetics, right? There's two different supply chains. We should put out that their pharmacy benefits business, it is the largest segment, did record revenue of $39.34 billion. That was up 8% from a year earlier. The company attributing the results to more pharmacy claims, growth in specialty pharmacy, and inflation of branded drugs. We know that has been an area they have focused on for some time.
Yeah, and we're going to speak a little later to the CEO of Teva Pharmaceuticals, and interested to hear his thoughts on supply chain, in addition to many other things.
Yeah, I mean, generic drug maker, right? And so it'll be interesting. And opioid, the claims and their involvement in some of those settlements will also be interesting. One of the big themes that we have been talking about, certainly when it comes to results, is what CEOs are seeing when it comes to growth outlook. What are the pricing pressures? What are those supply chain problems? And really looking forward to catching up with the CFO, Chief Financial Officer of Chipotle. This stock has shot up big time today. It's been under some pressure, but nonetheless, this is a company that has been raising prices, says it will probably do it again.
It's got the power to do it.
Raising wages as well, but also dealing with some supply chain issues.
Yeah, the mainly increase in costs associated with the rising price of commodities, Carol. For the last quarter, digital sales accounted for 41.6% of sales. Last year, digital sales accounted for 45.6% of sales. Incredible to see that growth during the pandemic.
During the pandemic, it was like 80-90% of sales. I mean, it was just everything was online, and they were pivoting already big time to digital pre-pandemic, but it really paid off for them big time during the shutdown. Shares at Chipotle, they're pretty much at their best levels of the day, up 10% up, $148 to $1,610, 37 cents a share. So quite a rally. So we'll talk with the CFO. Lots of talk. What's top of mind for you? For him?
Inflation due to beef and freight. Avocado costs as well.
I know.
They called those out in their press release yesterday.
It's a big part of their cost equation. All right, you're listening to Bloomberg Business Week. We've got a jam-packed show. We look forward to sharing it with you. Carol Massar, Tim Stenovic. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So it is one of the top performing stocks in the S&P 500 today. It's on a tear. It's up more than 10%. We're talking about Chipotle Mexican Grill.
Yeah, the company reporting earnings yesterday. And in just a couple of minutes, we are catching up with Jack Hartung, CFO at Chipotle Mexican Grill. He's going to join us from California.
In the first up, let's get a check on your trading day. Let's head on over to Charlie Pellet. Hey, Charlie.
Well, hello there. Lots going on today, Carol and Tim. Let's begin with the S&P up now by 63 points. That is a gain of 1.4%. You run the GIP graph on the S&P. That is the best level of the day right now. We've got the Dow up 317, up 0.9. NASDAQ up 260, gain there of 1.8%. And the 10-year yield, 1.92%. Spot gold up 0.4 right now, 18.33 the ounce. West Texas Intermediate crude oil also pushing higher, up 0.3%, 89.59 a barrel, and Bitcoin up 0.8, 44,583 on Bitcoin. Repeating our top story, the Federal Reserve Bank of Boston has announced that Susan Collins, a University of Michigan economist, will be its new president, marking the first time a black woman will lead one of the central bank's 12 districts. The S&P, as I mentioned, is higher now, up by just about 1.4%. Hong Kong COVID cases are at a record. Hong Kong now urging residents who suspect they might be infected with coronavirus to avoid emergency rooms after cases top 4 figures for the first time. New York Governor Kathy Hochul is lifting a mask mandate for businesses that don't check COVID-19 vaccination status, citing high inoculation rates and low transmissions across the state. Local municipalities can now continue to determine their own rules, including New York City, which will maintain a mandate that requires vaccination for theaters, restaurants, and other businesses. Businesses can also choose to implement their own mask rules. Dr. Stuart Ray is Vice Chair of Medicine at the Johns Hopkins School of Medicine. He told us this morning masks still make sense.
Mandates or not, people really should be thinking about how effective masks are and the reality that we need to limit spread of this virus. It's a shame that mandates are the big conversation when it should just be sensible to wear a mask, and that's really where we need to get. And if we can politicize the wearing of masks and just wear them when rates are high, that would be really helpful.
The Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder and majority owner of Bloomberg LP, parent company of Bloomberg News. Checking those vaccine stocks that we check every day at this time. Pfizer down 0.3%, a surge in ADRs of BioNTech up now by 7.4%. AstraZeneca's ADRs up 0.7. Moderna higher now by 6.8%. J&J Johnson & Johnson little changed, up less than 0.1%. Again, repeating our top story, Federal Reserve Bank of Boston has announced that Susan Collins will be its new president. S&P up now by 64, up 1.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, investors definitely loving companies that increase their prices, and that includes the next one that we're going to talk about. We're mentioning Chipotle Mexican Grill. Shares jumping about 10%, most since last summer. Following last night's quarterly update, it showed that fourth quarter sales, comp sales, adjusted EPS, all topping estimates. Company also raising its outlook. The company's CEO, Brian Nichols, saying on the call he's not seeing any signs that inflation is slowing down. Specifically, Tim highlighting higher beef costs, saying the company may have to raise prices again, also raise wages.
Well, let's bring in Jack Hartung, Chief Financial Officer for Chipotle Mexican Grill. He joins us on via Zoom from Chicago, so folks watching on YouTube certainly see him there. Jack, how are you?
I'm great. How are you guys doing?
We're doing well, thanks. I want to jump right into it with the pricing power, considering the rising input costs that you guys called out yesterday in your earnings release. Help us understand how much pricing power you have to raise the price of items on the menu in order to combat those higher input costs.
Yeah, it's one of these kind of mysteries, if you will, Tim, and that you kind of hope you never find out. The reason is if you find out, it means you've raised prices too high, and it means customers are resisting. We've always been very thoughtful whenever we've had to raise prices, including in this environment. And frankly, every other restaurant company, grocers, everyone is raising prices. So we still think that we're kind of, at or maybe a little bit behind the median and what companies are doing. And so what we want to do is while we think that we can raise prices more, we'll watch and see how the inflation environment unfolds. We do think we've got additional pricing power, and if we need to, we'll spend it. But we'll look at other things like efficiencies and, are there other ways to find some, cost-saving opportunities? And if there aren't, and if we have to raise prices, we'll do that. But it won't be the first thing we'll do.
Where, Jack, are you seeing the costs rise the most and the quickest? Is it wages or is it on the commodity side?
Yeah, well, wages really increased a lot last year. And in our case, we took a big stair step. We increased our wages by about 15% for all of our restaurant employees. And that was a big impact. And then we did that in the April-May timeframe. That's when it became clear to us that there was a imbalance between the demand that we and other companies had for labor as the economy was opening up, and then the people coming back into the workforce. That helped us significantly. That allowed us to retain our existing people. It allowed us to increase application flow. We're a growing company, so we're constantly hiring people. And so that allowed us to stabilize the workforce to the point where right now we feel like we're in a good labor position. It's not like we're completely over the challenge. It's still a challenge, but we're in as good of a labor staffing position now as we were even before the pandemic. And I don't know that every company could say that right now.
Hey, Jack, do you feel like in terms of the labor shortages and the crunch that we're hitting peak and that things will start to get better? And same questions on the pricing side of things. Do you feel like we're getting kind of inflation peak, if you will?
Yeah, I don't think either are over. I think labor is going to continue to go up, but I would expect there won't be another kind of shock like when we were kind of at the leading edge when we raised prices in the wages in the May-June timeframe. Most other hospitality and restaurant companies have followed since then. I think there are going to be increases, meaningful increases, but I don't expect that there'll be another 15% jump. What we're seeing right now is there are pockets where when there are shortages that you're going to have to maybe raise wages in a preemptive manner rather than risking falling behind the wages in that market. From a commodity standpoint, most of our challenge has been in beef. That's been throughout the year, and in the fourth quarter it hit us again. Freight as well, especially we get a lot of our packaging in from outside the U.S., and freight has been a real challenge, not only just to get enough supply because there's such bottlenecks at the ports, but also the cost of freight is going up significantly. Our outlook suggests that nothing is going to ease in terms of material or ingredient inflation till at the earliest later in the year, maybe not even until 2023.
Wow, so it sticks around for a while. Hey, I'm curious about wages too, because that's something that we've talked to a lot of economists, Jack, that stays with you, that cost. And I'm curious, I've spent a lot of time with your previous administration that you guys pride yourself in holding on to workers and grooming them to move up the chain. So will those higher labor costs be problematic maybe down the road?
No, in fact, we still pride ourselves on our people culture. We promoted 19,000 people last year. That's what you do when you have a thriving, growing company. We like the idea that when crew join us today, that they can join us for a job today, but that can turn into a career over time. And even if they don't stay with Chipotle their entire career, we will teach them skills like how to cook in a real restaurant. We'll teach them how to lead people. We'll teach them how to run a business. And if they stay with us, that's fantastic. If not, they're still going to learn life skills. And so we run all of our restaurants. We're unique in the restaurant industry where we have almost 3,000 restaurants. None of them are franchised. So we need to have the ability to hire great people, to develop great people, and to give them opportunities to move into management roles. And that's alive and well at Chipotle.
Hey, I want to talk a little bit about growth and expansion, physical expansion here. In your release yesterday, you said based on the success of small town locations that are delivering unit economics at or better than traditional Chipotle locations, you now believe there can be at least 7,000 Chipotle restaurants in North America, up from that prior goal of 6,000 restaurants. Talk to us about the competition for real estate here and how difficult it is to actually find compelling real estate opportunities in a market like this.
Yeah, it's always been a challenge. There's always growth companies out there, but we do really well. And the reason we do well is that, as I mentioned, we're company owned, so we can make quick decisions. We have a dynamite real estate development team. And so they're out there. They know the brokers. They know the sites. They know how to pick great sites. And when we show up and knock on the door of a landlord or developer and we're interested in the space, they love to have Chipotle in their development. The reason is we bring traffic to their development. And so if we're in a center where there's 5 or 6 or 7 different tenants there, they can count on the fact that Chipotle will bring a lot of people to their center They will recognize some of the other tenants as well. So we get a lot of attention, and we're one of the preferred tenants out there. We also have been very successful in not just securing the sites, but also getting the approval to get a Chipotlane, which that's our version of a digital drive-through. And even if we don't have a freestander, and it's a great convenience for our customers, and our landlords and developers have been working really well with us to make sure we can get the Chipotlane. And so that's because we really bring something to their center that they're really after, and that's more foot traffic.
That's what I wanted to ask you, though. You guys opened your first digital-only Chipotlane restaurant. I believe it was late last year in New York State. How's that going, and what are the expansion plans with that?
Yeah, it's actually really good. We have 2 now fully digital restaurants. What that means is there's no front line. So if you walk into a restaurant, you're not going to see a front line with a register where you can order and then pay. Everything has to be order ahead. You can order ahead and pick up. In one of the 2 cases, we've got a Chipotlane, so you can order ahead, not get out of your car. You still can get out of your car and walk into the restaurant if you'd like, and our team will treat you to a great experience, but you have to order ahead. These are early days. These are early experiments. We do think there's going to be opportunities for what we call a seam location, meaning you could have a lot of Chipotle restaurants in a certain trade area, and then there's an underserved area kind of in the middle. That might be a great spot for a smaller restaurant that has just the Chipotlane and no frontline ordering. So it's early days, and we'll find where these make the most sense, but they're both off to a great start.
In that same vein, digital sales for 2021 for the full year, 45.6% of sales. Carol mentioned how they shot up during the pandemic. What's a way for investors to think about that digital versus physical mix when we do get to the other side of the pandemic? Where does it stabilize?
Yeah, our guess, and it really is just a guess, that it probably bounces at about a 40% or in that low 40% range. When we look at our markets throughout the country and others, different markets have had different impacts from COVID, and they've come out of COVID faster or slower. When we look at the ones that were least impacted, they didn't fall below a 40% range. And when we look at the 40% of digital sales today, these are mostly our loyal customers. They come very often. They tend to spend more, and they really like the digital channel. The convenience of digital, once you get into our app, once you sign up as a loyalty member, is so easy that our customers tend to stick with it. So I would see that we'll probably stay in this low to mid 40% range, and then we'll bounce up from there as more and more customers discover digital. The reality is, even though it's almost 40% of our business, the majority, the largest group of our customers have never tried digital. So there's still a big opportunity for us.
Hey, Jack, just got about a minute or so left here. You've been at Chipotle for 20 years. You've seen a lot at that name alone. McDonald's before that. You understand this industry, but this is an interesting time coming off a pandemic. We love to hear from the C-suite. What's top of mind for you right now?
Yeah, most important thing to me and our entire executive team is people. We have a food ethos. We really take pride in the quality of food that we source, the quality of food that we cook in the restaurants. But all of that happens with great people. That means great people on the front lines. It means great managers for the 235 to 250 restaurants we're going to open up during this year. It means great people in our offices as well to support our restaurants. The reason we are company owned and not franchise is it takes a lot of hard work, a lot of care, and a commitment to a purpose to actually care about the food, how we source it, how we cook it, and treating customers with great experience. And so as long as we have a great pipeline of people joining Chipotle, developing into the management ranks, we'll have a bright, bright, bright future. That's something that's going to be a high priority, really, in any environment for us.
All right. The only thing that would have made this better is having some guacamole with you. I'm just going to say in-house. But
You're making me hungry.
Me as well. Jack, thank you so much. Hello to all of your team, and we really appreciate it. That's, of course, Jack Hartung. He's the Chief Financial Officer of Chipotle Mexican Grill on the Zoom from Chicago. This stock, it is one of the outperformers on the S&P 500 today.
Well, February is Black History Month, and every day this month we are celebrating significant moments in U.S. Black history. Now, with your installment for February 9th, here's Bloomberg's Renita Young.
On this day in Black history in 1995, Bernard Harris Jr. becomes the first African-American astronaut to take the spacewalk. As payload commander on Space Shuttle Discovery STS-63, Harris served on the first flight of the joint Russian-American space program. Along with C. Michael Foale, the two men tested modifications to their spacesuits so they could keep spacewalkers warmer in the extreme cold of space. And while at NASA, Harris did clinical investigations of space adaptation. mission. He also developed in-flight medical devices to extend astronaut stays in space. Throughout his career, Harris has logged more than 438 hours and traveled over 7.2 million miles in space. He's now the CEO of the National Math and Science Initiative. That's Today in Black History. I'm Renita Young, Bloomberg Radio.
A big thank you to Bloomberg's Renita Young for that Black History Month update.
All right, right now, let's get a check of your top business stories. Another update on the trading day. Here is Charlie Pellet.
Thank you very much. And here's what's going on. Stocks higher across the board. Best level right now. Dow, S&P, NASDAQ, all advancing on this Wednesday. Right to the numbers. We'll give you the why in a moment here. S&P up 64 now. That is a gain of 1.4%. The Dow up 336, up by 1%. NASDAQ up 272, up by 1.9%. Year to date, the S&P does remain lower by 3.8%. 10 years up 10.30 seconds. 10-year yield 1.92%. Spot gold up 0.4, 18.33 the ounce. West Texas Intermediate crude up 0.1%, 89.48 a barrel. We were just talking about Chipotle Mexican Grill. Shares surging after earnings, up now by 10% after the bell today. Among the companies that we will be hearing from, the Walt Disney Company. Walt Disney up now by 3%. Also reporting after the closing bell today will be Uber, up right now by 4.4%. Repeating our top story, the Federal Reserve Bank of Boston has announced that Susan Collins, a University of Michigan economist, will be its new president, marking the first time a black woman will lead one of the central bank's 12 districts. I'm Charlie Pellet. That is a Bay State Business Flash.
All right, Charlie Pellet, thank you so much. Charlie Pellet, of course, reporting for all of our outlets here at Bloomberg Radio. You are listening to Bloomberg Business Week on this Wednesday. Super Bowl, yep, it's this weekend. Big matchup between the Bengals and the Rams. And Bloomberg Business...
Oh, I got to turn my microphone on. Go Bengals.
The cover story of Bloomberg Business Week this week is about the big game and the betting apps that want you to come for the game. And then, you know what, Tim? Stay and gamble forever.
Yeah, and you're certainly seeing the ad spend to accompany their desire to actually get you on the platforms. Joel Weber is editor at Bloomberg Business Week. He's with us in the Bloomberg Interactive Broker Studio. Peter Robeson, projects and investigations reporter for Bloomberg News. He joins us on the phone from Seattle. Joel, it certainly feels like, and it's clear reading this story by Peter and Ira, that there has been this sea change when it comes to the acceptance of sports betting from something that was illegal and, prevented people from joining halls of fames to something that is actually being embraced by the leagues. What happened?
The smartphone.
Good answer.
Kind of true, though. I think what the story really goes into here is that, look, we've long seen what sports gambling can do, and it's always been a concern that the integrity of the game would be in question. And that is a legitimate concern, as Peter and Ira write in the story. Basically, every sport in every league around the world that has had to do with legal betting has had to confront this question of, like, does this have the potential to undermine the sanctity of the game? And that was a thing that the NFL obsessed over for years and did not want to embrace gambling. And then it was just like, never mind. And
all in.
And part of that was the money. So Peter, like, this has been a sea change just within the last couple years. What makes this year's Super Bowl, especially the one to watch when it comes to sports betting?
Well, one big thing that changed is that online sports betting is now legal in New York, and you saw a massive uptake. More than 1 million people created new accounts. And the thing that the light bulb moment for me was reading a report from Goldman Sachs, which pointed out that these apps over time might each have 15 million customers, and that's the number who watch a usual NFL game. And so when you have that many eyeballs and that many people coming regularly on your site, it gives you a lot of power. And in a lot of other countries, the gambling sites are the way people watch these games, and it's the filter through which the games are watched, which seems like a really big deal for all these sports over time.
What I find so
go ahead, Carol.
Well, what I find fascinating is
he just wants to talk about the Bengals, as we now know.
He does.
Yeah.
Go Bengals! I got it. But what I think is interesting, the MLB was early in on DraftKings, Robert Kraft, Jerry Jones. I mean, colleges, they went from like not doing anything, to all of a sudden they're investing in big time. And there's meetings kind of, I feel like, was it Kraft's son who brokered kind of a meeting with one of the betting apps? Like, it's just interesting how entrenched it's become.
Yeah, there was preparation behind the scenes for this moment, even before the Supreme Court opened the floodgates with its ruling legalizing sports betting outside of Nevada in May 2018. Even before that, as we report in the story, Roger Goodell met with Jason Robbins from DraftKings in a Boston suburb with the Kraft, with Robert Kraft and his son. And fantasy, as another person we talked to said, fantasy was really the wedge that helped these leagues get comfortable. It was almost like a soft launch for gambling. And it also showed the leagues and everybody how popular this is.
Okay, the question of purity. How do they keep it pure?
It's a really good question, and it sounds like one that the league is still working out itself. We talked to the chief compliance officer for the NFL, and they have developed an online training course. They have stepped up their discussions with league personnel about what information can be shared outside the league, because with so many prop bets, including what color is the Gatorade going to be that's dumped on the coach's head, there's a lot of potential.
I was thinking
what
that was
is
pretty
that?
easy to find.
What color is it going to be?
Blue, green,
Yellow.
red, who knows?
Right, and I guess one distinction is that those bets that tend to be on offshore books, which are less regulated, but the point remains that there's a lot of potential for shenanigans, and so the league is trying to get ahead of that. They've also had workshops with players where they bring in what they've called bad guys who've been caught before, trying to groom players and fix games. And the skeptics will say that you can't do that with complete success, and really any one case is it creates a huge perception problem. And you saw that even in the Premier League recently, where a yellow card given late in the match has caused a fury on Twitter with people claiming that there's somehow a fix. So it changes the way people watch games when betting is so entrenched.
How much money is sloshing around here for the NFL? Like, what's their take in all this?
It's already substantial. It's in the hundreds of millions. Just one deal that the NFL signed with a data provider is reportedly worth $120 million a year to it, and over time they're talking $1 billion a year, which is a lot of money for a league that in the pandemic year took in $12 billion. So
yeah,
and Goldman's talking 30 billion plus over time just in the U.S.
You mentioned the data providers there. That was a thing that I learned in the story. Can you talk more about what's happening in the back end and that data? Because those are companies that many people may not have heard of.
Yeah, and they're fascinating companies. It's companies, one of them is called Genius, another is called Sport Radar. In some cases, again, the leagues are taking equity investments in these companies. So the NFL has a stake in Genius, and what these companies do really is they go to events around the world and they collect, they do a live feed of the game, they collect data from it, they collect statistics, and those statistics and the feed lets sports books around the world lay odds on both the game and events during the game. And it's incredible how many events are covered. Some of these companies are covering 100,000, 200,000 plus events a year, even in lower tier leagues.
Hey, Peter, one of the promises that, or at least the selling points that these apps and services are making to the leagues is this idea of engagement and the way that it drives engagement to levels that the teams want to see and the leagues want to see. What do we know about the relationship between the way that people bet, who bets, and to what extent they actually pay more attention and tune in and see the ads in the games?
Well, I know Genius has a statistic that people are 98% more likely to watch a game if they're placing a bet on it. Certainly if your money is at stake, you're more likely to watch, or at least to watch a portion of it. So that's one big factor. I mean, the other factor we get into in the story is just the possibility of addiction. That as one person pointed out, people between the ages of 14 to 35 are especially likely to gamble.
I think
we're seeing increase in rates already.
That is like such an important point in this, because it looks like a ton of fun. Like there's all these funny prop bets. Then it's like, oh, by the way, 18 to 35, like, can you imagine how many people are going to get addicted out of this? Because it seems like nothing, and then it's like, oh, wow, that just drained my bank account.
That's your future cover story. You know it's coming.
Well, we can start with this one, and we'll see where it goes, okay?
Well, I think it's interesting to have this story. We've got the Super Bowl, and then, of course, you've got the former Miami Dolphins head coach, Brian Flores, his suit, which included a claim that the owner of the team had offered him money
to throw the games
for each game
to
he
get
lost.
the draft pick higher for the next year.
This is going to be a big conversation, continues to be ahead of the Super Bowl. Our thanks to Joel Weber, editor of Business Week, Peter Robeson, projects and investigations reporter at Bloomberg News. The cover story, check it out.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
And this is Countdown to the Close, but 60 minutes left in the trading session. Caroline Hyde, Romaine Bostick, and Taylor Riggs, joined now by our colleagues Carol Massa, Tim Stenovic. And we bring together, of course, audiences across TV, radio, YouTube to dissect what is a global rally. S&P 500 up more than 1.3% at the moment, basically.
Yeah, and really broad-based, right, Caroline? Like, there's definitely
sounding like
here.
Taylor.
Really broad-based. We're seeing most members of the S&P 500 higher today. So definitely seeing some strength here.
Yeah, helping this rally today, helping pull the NASDAQ 100 out of correction territory. We talked yesterday about Facebook. When is it going to get a bid? Well, that bid finally happening today. Those dip buyers coming in. Facebook shares helping lead the NASDAQ 100. Second best performer on a points basis, up 5.6% right now.
All eyes on Meta, all eyes on the NASDAQ up 1.7% almost, 235 points high. The S&P up 55 points, 1.23% on the upside. You're seeing about 0.8% in your cyclical play. Dow Jones up 278 points. But once again, Russell 2000 getting a bit of a bounce back. We're above 2,000 level, up 33 points, 1.64% on the upside.
We've often talked about, well, the impact of yields as well on the Russell 2000, Caroline, that correlation not impacting the major averages at least today. But take a look at where we are in terms of the intraday moves of the first level. And some of this is technology, as you mentioned, really outperforming. You're up 2.25%. The bond yields coming down is also helping boost real estate. That's up 2%. Energy, it's at the bottom of the screen. It's still up about 0.3%, but we pointed out only because of the massive run that we've already seen so far this year. You would know that remain in your world of commodities as well.
Yeah, absolutely. And you talk about the moves that we've been seeing here in tech here on this day. You got NVIDIA, Microsoft, Apple, Alphabet, all higher here on the day. But Meta, look at this, Facebook. I'm going to call it Facebook, up 5.8% right now on the day, of course, coming off of a 4-day sliding that included, of course, that 26% drop that we had last Thursday. So maybe finally some sort of threshold was reached there that some people thought to buy the dip here. Remember, this is still a company that's still churning out a ton of advertising content, and you really can't discount that. And in fact, we had Omnicom, I was going to call it Omicron, Omnicom results a little bit earlier, the big advertising agency.
Delta.
And they really knocked it out of the park there. We're going to get Interpublic Group earnings after the bell, or excuse me, before the bell tomorrow morning. Those shares are higher by about a 5.6% right now. And then, of course, you had DoorDash here. I don't know exactly why it's getting bid up. There was an interesting story here about them potentially offering some sort of financing program here for some of its restaurants. Don't forget, we also get Uber and Uber Eats earnings after the bell tonight, so that might give us a little bit of a read into how DoorDash is doing, guys.
Meanwhile, this is a day where we really have to focus in on the bond story as well. Remain, Taylor, been so strong on this throughout the day. The fact that yields pull back a little bit, unbelievably strong demand at the US Treasury auction. And Taylor, I know that was really what you were bringing to bear, is the extent of demand going into it. But Carol, it's notable. We get so much news around the Federal Reserve, and we're still so much focused on the impact of them on US Treasuries.
Yeah, Fed definitely important. Rates are definitely important, and so is the ability to raise prices, right? It's kind of a tale of two markets. Chipotle raises prices, they get rewarded. Clorox, struggles with it, right? We've seen that stock being beaten up. We talk a lot about inflation here, and I think yesterday we got into it about how inflation impacts different segments of our public very differently, and the ability to deal with higher prices. Well, someone who thinks about that a lot is Joe Stiglitz. He's over at Columbia University, watches the economy. He's a Nobel laureate, and he caught up earlier with our surveillance team. Here's what he had to say about his concerns when it comes to inflation.
It is not a good thing to raise interest rates to kill the economy in order to beat what is still moderate inflation, 7%. At the current juncture, if you raise the interest rates, it will slow down the economy. And the first order impact is going to be on unemployment. People who might otherwise have gotten jobs won't get those jobs.
So, of course, that's Joe Stiglitz over at Columbia University, Nobel laureate. It's interesting how he says 7% moderate, right? We talk about, do we have peak inflation? We'll see what that print is certainly tomorrow. But he is worried about higher rates and what it does for the broader public, Tim.
Yeah, well, look, we know that companies are still struggling to attract and retain talent across all segments of the population. So as of right now, that demand is still there. Those numbers tomorrow that we get, though, inflation, it's actually ticked down. According to economists surveyed by Bloomberg earlier this week, it was they were thinking 7.3%. Right. Now 7.2.
Yeah.
Oh, good.
Okay.
So
well,
a little bit.
Thank God.
All right.
Thank God. So everyone in the market will be okay tomorrow. And I know, Carol. Look, you're a left coast elitist here, but for the rest of us out there in the world here, you talk about prices going up at Chipotle or whatever your favorite restaurant is, prices at the supermarket, energy prices going higher here as well. These are real world costs here. And when you look at some of the wage gains that we've made here, under any other circumstance, that would be considered phenomenal, but that's being outstripped significantly by the cost of things. It's not just the beef at Chipotle, it's the steak that you buy at the grocery store.
But nobody disputes that, right? We know that there are higher prices, and it's much more easier for some people to deal with it than others. And this is where I think Joe Stiglitz gets to, is getting to the point that we need to think about when the Fed goes to make those decisions. If
Who
it
do they have
raises
in
rates,
mind?
who gets impacted?
Well, it was
Who
interesting.
does the Fed have in mind?
Well, who do you think the Fed has in
I
mind?
don't know.
Well, Alan Blinder, we just spoke with him about 10 minutes ago on TV, and he did say that running the economy hot. Now, I know that this might be a little different because of all that inflation and the impact on real wages.
Yeah.
But typically, he did say, Caroline, running the economy hot does help and benefit the lower end workers who've seen their wages increase much more than some of the high end workers.
Here comes the tension, and it's right that Romaine really refocuses us on it because we have a new announced head of the Boston Fed. Of course, someone who is Susan Collins, who looks a little bit more like the people who've been left behind previously, perhaps will help with we need more diversity of views over the Federal Reserve so that you do perhaps not shy away from running an economy hot when you are really focused on inclusivity. At one point, all we cared about was that, and then suddenly as we get to a moderate 7% inflation, everyone suddenly desperately backs away from it. But maybe she could be a voice that says, look, inflation has to run that much hotter.
Well, it'll be interesting, and obviously she doesn't take over until July, so I mean, whatever Fed tightening cycle we get, at least based on what's pricing in the market, is going to already be underway by the time she gets there. I mean, in fairness to Jay Powell, I mean, he has sort of alluded to this idea of running the economy hot. He actually kind of said he was willing to do that in order to get us to full employment, but now he's also saying, well, we're at full employment. Are we? I don't know. What's the metric?
We don't know. And there's
What's the metric he's given us?
There's 3 meetings before she, I guess, essentially will have some say in those Fed decisions. It's a tricky point right now in terms of what the Fed does. Does it let it continue to run hot? Do we see supply chain problems kind of work their way out? Does the economy, we're taking masks off here in New York City. We're seeing that increasly around the country. Do things get back?
Never put on their masks.
What?
Some people never put on their masks.
I always wear a mask. Even if I'm a left coast elitist, I wear
It's like,
a mask.
especially if you're.
When did I get branded like this? My Republican father is rolling over in his grave.
And I just want to
just
point
gonna
out.
say.
All right. Well, okay. That's a whole nother conversation. But real quickly here, but on Susan Collins, in all seriousness.
Yeah.
I mean, you also have to wonder how much influence she's going to have. I mean, we know the regional Fed presidents don't necessarily have as much sway in those FOMC meetings as I think we tried to give them out to be. It's really the governors, and if they're basically saying that things are too hot, then guess what? Rates are going up.
Well, we're going to see. The Fed has talked about being more inclusive, being more diverse. So they're going to have a lot of pressure on them to listen to these voices.
That is right. QE's still going on. Did you know that?
Still happening.
I heard that from Taylor before.
And we're still awaiting Lisa Cook and the others to perhaps become those governors.
Can I have some guacamole? I'm just going to say.
It's going to cost you.
It's going to cost me. I know. I can't afford it. All right. We will be back in less than an hour's time. We're going to count you down to the close. We'll have Beyond the Bell, our cross-platform coverage on radio, on TV, on YouTube. We will count you down to the close on this wacky Wednesday.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business
I
Week.
thought the left coast was California. Someone, get in touch with me on Twitter. I don't know. I'm going to have to Google this. But I've always considered myself from the left coast.
For those who listen, I listen to a lot of different perspectives, and it goes into...
You're from New Jersey.
It's what, I know. I mean, I grew up with a lot of conversations, large family, lots of people weighing in. It's what I love about this job is that we get to hear, and then we get to hopefully hear opposing points of view, informed points of views, and then we share it with our audience, and they can make up their mind.
Yeah. Hey, I want to go back to something that the Chipotle
I'm not a
CFO
card-carrying
Jack
anything.
Hartung told us because...
Except I'm like a card-carrying yogi.
Exactly. Hey, going back to our interview with Jack Hartung earlier, the idea of how much pricing power Chipotle has. I thought his answer about we don't want to find out was really interesting because if they find out, that means they've raised prices too much. So far, that consumer has been willing to pay up for those extra input costs.
It mirrors kind of where the Fed is. If they raise rates too fast, too much, right, they will find, unfortunately, after the fact that they've done something that they did too much.
Stakes higher for the Fed than for Chipotle.
It ain't perfect right now, calling these shots. All right, let's get back to world and national news. Nancy Lyons, take it away.
Thanks so much, Carol. New COVID cases and hospitalizations remain on a downward trajectory, but the rate of deaths has not leveled off. So the CDC's Rochelle Walensky says we need to still be safe.
At this time, we continue to recommend masking in areas of high and substantial transmission. That's much of the country right now in public indoor settings. And so we're, of course, taking a close look at this in real time, and we're evaluating rates of transmission as well as rates of severe outcomes as we look at updating and reviewing our guidance.
Walensky says they are encouraged, though, by the downward trend they're seeing. President Biden's nominee for the Federal Communications Commission, Gigi Sohn, took heat today from Republicans during her confirmation hearing before the Senate Commerce Committee.
Republicans attacked Sohn's role in a court case against broadcasters and her 30-year career as a public interest telecoms lawyer.
What you'd have is an FCC full of people with no knowledge about the issues, about media communications policy. I don't think, Senator, anybody really wants that.
Democrat Richard Blumenthal said the goal is to stymie FCC action from promoting broadband competition in apartment houses to blocking robocalls and texts.
That proposal goes nowhere until you're confirmed, correct?
That's correct.
Sohn added that lawyers for telecoms companies have previously been confirmed for the FCC. In Washington, Irv Chapman, Bloomberg Radio.
The grocery checkout line will soon be missing some magazines. Entertainment Weekly, In Style, Eating Well, Health, Parents, and the Spanish edition of People are all going totally digital. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. Nancy Lyons with World and National News. We talk about higher prices. We talk about companies' ability to raise prices, and some get rewarded. Chipotle certainly gets rewarded. Some, like Clorox, have trouble passing on those rising costs to customers, and then they get hurt by investors. Going to the Super Bowl, though, I guess it's for those left coast elitists.
I think this is revenge spending at
West Coast
its
elitists.
finest, right?
Yeah.
You've been,
That's a good point.
You've been missing those experiences. You haven't been going to concerts. You haven't been able to attend sporting events. Look at the Olympics right now, watching those, right? There's nobody there because they're not allowed to be there. It's definitely a different vibe. Hey, if you want to go to that Super Bowl, it's going to cost you. Fans are paying over $7,000 on average. It's more than double the prices in 2017.
We were talking about this in the makeup room. There are some tickets, though, that are going for a lot more than that.
Yeah, okay, so this is funny. I was thinking about this because you and I are headed to California tonight for the Power Players Summit on Friday.
Which is kind of a
Bloomberg
lead up
Live.
to the Super Bowl. It's athletes, it's team owners. Please join us. We'll be broadcasting there. It's going to be amazing.
And I keep telling people I'm going to California, I'm going to LA, and everybody asks me, oh, are you going to the Super Bowl? Are you going to the Super Bowl? And I'm like, I am not going to the Super Bowl because it's $7,000 a ticket.
Exactly.
I would like to go.
And we're not allowed to accept,
Oh, yeah, I mean.
We don't do that. Even though prices are around $7,500 on average, they are down from an average of $8,257 per ticket on February 4th. Cost dropping after the San Francisco 49ers lost to the Rams in the NFC Championship game. I got to say, the NFC Championship games were so good. The Super Bowl, man, if it's a snoozer, we're all going to be so disappointed.
My wife is from Cincinnati, talking to members of her family, people who have, it's been so long since they've seen the Bengals in a place like this.
She's psyched.
She's psyched, and we know some people who are going. Not surprised that they are spending this money because these Bengals fans are so excited.
You could still go to the Super Bowl.
Could I?
Cheapest seats were just under $4,500 today, the lowest since the day the matchup was set.
Okay, so no college for Arlo.
Sorry, Arlo.
Just going to the Super Bowl instead.
Be a plumber.
Okay.
You're listening to Bloomberg Radio. We've got more coming up. We're watching the markets for you. This is Bloomberg Radio. Carol Massar, Tim Stanovic.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks higher across the board. Let's head right over to the First Word breaking news desk for today's afternoon call. Here is Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks with a bid today, with the Dow currently up 235 points. The S&P's gained 49, while the NASDAQ is up 213. The U.S. 10-year yield at 1.93%. Gold is up 7. Oil trading higher. And Bitcoin is up by 0.8%. Among the main 11 S&P sectors, only consumer staples were in the red. And leaders to the upside in the Dow, Disney, Intel, and Nike, while Coca-Cola led to the downside. In deal news, Republic Services to buy U.S. Ecology for $48 a share in cash. And in other news, the Intel CEO expects chip wafer supply to remain tight through 2023. After earnings, Chipotle gained as much as 10.7%. And wrapping things up, Disney reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you, Bill. To hear live breaking news over your Bloomberg, type SQUAWK, SQUAWK, on your terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate it. Another stock jumping on earnings today, or its latest quarterly update. Teva Pharmaceutical up about 7% after reporting that fourth quarter earnings beat estimates.
Cor Schultz is president and CEO of Teva Pharmaceutical on the phone from Parsippany, New Jersey. Cor, how are you?
I'm very fine. How are you?
Doing well, thanks. Hey, I want to just briefly touch on the quarter and then jump into some other stuff. Teva shares up 7% now. It was up 9% intraday after reporting those earnings. Wells Fargo says 2022 could be the trough for Teva sales, even as growth remains elusive. Where are you going for growth?
We're really going for growth in our key products. So we have two products on the market, Ajovy for prevention of migraine, which is a very efficacious, convenient solution for people suffering from chronic migraine. You inject once a month or once every third month. It's the longest acting anti-CGRP in the marketplace, and it gives you a really significant reduction in your migraine days. So that's one product. It's penetrating nicely in U.S. and Europe right now, and that will be driving growth in the coming 10 years, I would say. And then we have Austedo, which is a product that is indicated for two things. One is Huntington's disease, chorea and Huntington's, so these involuntary movements, and tardive dyskinesia, which is also significant involuntary movements that really disturb, people's lives, and it's really difficult to have a job and function socially when you have these involuntary movements. And Austedo is currently doing very well, growing nicely. It will sort of surpass $1 billion this year. And we see that as a huge potential because tardive dyskinesia has not been treated in the past because there's been no drug to treat it. And now we have this possibility. And right now, out of the probably 500,000 people suffering from tardive dyskinesia, there's less than 6% being on therapy and getting help. So another big growth driver. And the third thing is that this year we hope to get approval mid-year from FDA on a new long-acting antipsychotic therapy, risperidone LAI, in a new and improved way of long-acting. Most antipsychotics that are long-acting treatment for people who suffer from mental illness is long-acting by a depot that is injected intramuscular, so a long needle that injects a depot deep into your muscle tissue. This is a new and better product that's subcutaneous, so a small, thin needle, very short, very easy to inject. And it's really important because when you suffer from schizophrenia, every time you relapse, you actually lose some of your cognitive function of your brain. So you want people not to relapse. You want them on long-acting therapy. But if it's painful and inconvenient, then people go for the oral tablets, and then they go off the tablets at some point in time. They get a psychosis, and it's real bad news for them. So this will be good for patients, and we hope to launch it mid this year.
Well, Cor, we appreciate that, and because our investors and not our investors, but the investment audience and certainly our listeners want to know what's coming down the pipeline. Having said that, I feel like they don't think it's a clean story Treasury until all of the lawsuits and litigation over the opioid settlements is done. You guys did do a $225 million opioid settlement with Texas. That was on February 4th. More deals may be ahead. At least that's what our Bloomberg intelligence team is writing. And you have said that you might pay as much as $3.6 billion in U.S. settlements. Are we talking about cash settlements? Is that a real number? And what's the timeline?
So what we're talking about is a mixture of cash and product. And we, of course, being the largest generic manufacturer in the world, doing more medicines than anybody else, we have the lucky position that we can provide products that are needed to combat the opioid epidemic. And what we have agreed with Texas is that we are providing $150 million in cash over 15 years. And we are providing generic Narcan spray, which is a product you use when people have an overdose situation. So it's a very useful product to fight overdose deaths. And this product, by the way, is actually manufactured in our facility in Salt Lake City on a dedicated line we have there. So it's also, good for the U.S. that it's a U.S. manufactured product we're supplying.
But, Cor, you know that there are some lawyers for some of the plaintiffs that question the value of the drug component, the cost of that, and are skeptical about, basing maybe any kind of national deal on what happened in the Texas settlement. So what are your expectations? Will it continue to be this combination of drugs and maybe a smaller cash component, or might you have to pony up some significant cash going forward to put this completely behind you?
Yeah, what you're seeing in Texas is really that we have changed the mixture, because if you go back a bit more than 2 years when we had the framework settlement with the state AGs, where both Johnson & Johnson, the 3 distributors, and we came up with a solution. The solution for J&J and the distributors was all based on cash, and we were the only ones having a combination of cash and product. Back then, it was $250 million in cash and $23 billion in product. Now, we have, of course, switched that dramatically around now, you could say, with the Louisiana settlement and with the Texas settlement. And in the Texas settlement, the value is 2/3 cash, 1/3 product. So there's been a significant change, and it's no secret that the plaintiff lawyers, they don't get fees based on the product. So, of course, from their earnings perspective, it's much better to see cash than product. And you could say, I think the mix we have now in Texas is both very good for the population in Texas, people suffering from substance abuse.
Right.
But it's, of course, also more profitable for the plaintiff lawyers. And since everybody has to agree at the end of the day, it makes me optimistic we can reach a nationwide settlement.
By the end of the year, just quickly, yes, no?
Within the next 12 months, yes.
All right. Got to run. Cor, thank you so much. Wish we had more time. Cor Schultz, he's President and Chief Executive Officer at Teva Pharmaceutical, on the phone from Parsippany, New Jersey, but we are definitely seeing the stock move higher in the trade today.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Tuesday, Lemon. It's actually Wednesday,
It's
Lemon.
Wednesday. It's a long week for us.
Feels like Tuesday of November.
Does it?
Yeah.
You know who's having a good year?
Who's having a good year?
Oil companies.
Energy.
Yeah.
It's like taking off big time.
It really is. We're going to
Again.
talk all about that. That's the focus of Kriti Gupta's chart of the day. She joins us with a special guest in just a few minutes.
Yeah, looking forward to that. In the meantime, let's get a check on your top business stories. An update on that trading day. Charlie Pellet, 29 minutes to go.
Indeed, green on the screen. But speaking of green, you guys are talking about oil. We've got ExxonMobil on the minus side now, down 0.5%, but BP up by 0.5. Chevron pushing higher by 0.8. EOG Resources among some of the oil names also advancing up 1.1%. Pioneer Natural up now by just about 0.4%. Looking at the big picture, the United States Oil Fund ETF, ticker USO, it is up today by 0.8%. As we get to the numbers, crude up 0.7 now, $90 even a barrel, was trading for much of the day below 90. Crude, as I mentioned, up 64 cents a barrel. Gold up 0.4%, $18.32 the ounce, and the 10-year right now 1.94%. Another big day for the U.S. stock market. S&P extending yesterday's broad-based rally. Tech stocks recovering about half their losses this year. S&P up now by 64, a gain of 1.4%. The Dow is rallying 320, up 0.9, and NASDAQ up 277 points, up by 2%. Big news out of Boston today with the Federal Reserve Bank of Boston announcing that Susan Collins, an economist currently at the University of Michigan, will be its new president, marking the first time a black woman will be leading one of the central bank's 12 districts. New York Governor Kathy Hochul is lifting a mask mandate for businesses that don't check COVID-19 vaccination status, citing high inoculation rates and low transmissions across the state. Dr. Stuart Ray is vice chair of medicine at the Johns Hopkins School of Medicine, and he tells us mandates or not, masks still make sense, but then there's the question of which masks.
It is true that N95, KF94, KN95 masks, respirator masks, are more effective when worn properly. But the big thing is that the mask that works is the one that you wear well and that you can actually keep on.
The Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder and majority owner of Bloomberg LP, parent company of Bloomberg News. Among some of the vaccine stocks that we track right now, we have got Pfizer down 0.5%. Its German partner BioNTech, its ADRs surging by 8.5%. AstraZeneca's ADRs up 0.8. Moderna out of Cambridge, Massachusetts, up 6.9%. J&J Johnson & Johnson unchanged on the day. Recapping stocks higher, S&P up by 1.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, as she does each and every day at this time, Kriti Gupta, markets correspondent for Bloomberg, joins us with her chart of the day. Sign up for Kriti's chart of the day. You can do that at kgupta129 at bloomberg.net. Also, check her out on Twitter and Instagram at Kriti Gupta News. Kriti, you also today have an oil markets reporter with us, a special guest. Julia Banzeras is joining us as well. She's oil markets reporter for Bloomberg News. She's with us as well.
That's what Kriti does. She walks around the newsroom and she just collects like all these people who just want to work with her and learn from her. So it's
you
like
guys are
cool.
so sweet. You're gonna make me blush on radio.
It's true. It's true.
Well, I kind of feel like that
passes
kid.
it on.
I kind of feel like that kid in kindergarten who's like, I have something to show and tell, except my show and tell is my mentee. So this is kind of perfect. But let's talk about the chart of the day because I come in here all the time and I talk about oil prices all the time, and I feel like I've kind of
with
rubbed
good
off.
reason, though. If you think about the energy sector, like either as a commodity or on the equity side, like it's really been an outperformer.
It's huge, but you want to know what's doing even better? Energy stocks. And that's what my chart of the day shows for our radio audience is the S&P 500 energy sector relative to the S&P 500. And the key word there is relative because we know the S&P 500 has been rallying. We know energy stocks have been rallying. But it's a big deal when energy stocks have been rallying more than the index. And that's why this is such a big deal because oil prices have been climbing really since they went negative in April of 2020, right? But energy stocks have not been on that train until now, until the sell-off for the past couple of weeks where you saw tech take this massive hit. The S&P 500 now down 4% since the start of the year. Compare that to energy stocks, which are actually up 24%. So if we're talking about an inflation hedge, we're talking about getting ahead of this trade in the commodity market. Well, for the people who don't want to hop into oil, maybe energy stocks are a good bet. And bonus, a lot of these major energy companies are going into buybacks right now. So they have a lot of tailwinds when you talk about this sector. But we should actually talk about oil broadly, and that's where Julia comes in.
So Julia, come on in. Like, it is. It's such an important commodity, right? It's such a big cost equation for so many different companies and industries. How do you see it? What are you hearing about what's going on right now?
What I've been hearing from traders is that there is really so much space for oil to go up. It's really going to continue to rally because there is so much demand for it right now, and there's just not enough supplies. With OPEC, they're trying to put out a lot of output, but it's not happening. And so we haven't even hit the summer where there's going to be even crazier demand for gasoline. And so imagine this, economies are reopening, everyone wants to get out, and we just don't have that right now. So oil prices, they're going to keep going.
Wall Street got his Humvee. He's going to hit the road this summer.
I mean, look, it's not
That's
just
a
the
gas
high, it's
guzzler,
not
I'm
just
just
high gas
saying.
prices. There are serious political implications to this as well. Joe Weisenthal tweeting
Yep.
out a chart earlier that showed Biden's approval rating with the price of gasoline. These things are like totally inversely correlated, right? I'm wondering, Julia, how high traders are telling you it could go. What's the number we could see?
Well, they're really pricing in $100 a barrel. Everyone's talking about that, but if Russia invades the Ukraine, they could see it up to $120 a barrel.
I want to ask you about the Iran nuclear deal because you've been doing a lot of reporting on this. Tell us what we need to know about why that even matters for oil.
Right. If Iranian barrels can get back on the market, that's just more supply that we don't have. Right now, U.S. producers weren't producing as much. OPEC wasn't giving as many barrels. But if the Iranian barrels come back in the market, then that's good news for oil.
It's a really tricky time because it is such a political thing. And, there's such a watch on upping production and then what it does to pricing. What about the U.S. role in this, right? Like, it was for such a long time gangbusters, right?
Drill, baby, drill, right?
Exactly, right? We talked about the U.S. being energy independence. What about the U.S. component of this?
The U.S. component of this is basically that now U.S. producers are really feeling tempted with these high prices to start drilling again, and they're going to put up more rigs to start drilling, but we're only going to see the impacts of that in 6 to 8 months because it doesn't happen immediately.
So between now and then, we could see $110, $120 a barrel. What is the math equation that these companies do when they decide whether to build these rigs again and start drilling again?
I think it's really now that they're able to buy back their shares, now they're seeing as oil prices continue to go up and there's not enough supplies, and they're seeing that crunch of supplies, that's when they're like, okay, this makes sense.
It's such an interesting time because you have the majors, right, who are watching the world increasingly go to electric, right, knowing that there's going to be this big switch, right? And so what are they doing? And it's such a political thing in terms of, you think about the money, the lobbying that goes on to keep those guys still producing and pumping oil. Like, I feel like the next, I don't know, is it 5 years, 10, it's going to be tricky.
It's going to be very tricky. And it's tricky with the Biden administration, too, because as you know, as you mentioned, the higher gasoline prices are, the worse his approval ratings are. But also, he's saying he wants clean energy, so it's been a tough line for him to walk.
I always talk about recalibration. This is like our moment in time. Julia, thank you so much. Fun. Come back.
Thanks for having me.
Julia Fenceris, it's such an important part of our financial universe. Oil markets reporter at Bloomberg News, Kriti Gupta, Bloomberg markets correspondent here in our Interactive Brokers studio.
Let's head to Washington, D.C. from New York. Here's Nancy Lyons with an update. Hey, Nancy.
Thanks, Tim. House Speaker Nancy Pelosi says the Republican Party, quote, can run, but it cannot hide from January 6th. Pelosi today condemned the Republican National Committee for its characterization of the Capitol riot.
Republicans seem to be having a limbo contest with themselves to see how low they can go. They seem to have reached rock bottom with their statement that what happened on January 6th was normal political discourse.
Pelosi says it's a sign the GOP has been hijacked by Trump loyalists. Yesterday, Senate Minority Leader Mitch McConnell gave his view of what happened and called it a violent insurrection for the purpose of trying to prevent the peaceful transfer of power after a legitimately certified election. Lawmakers are considering a bill to address sexual assault and harassment claims on Capitol Hill.
The bill is aimed at ensuring victims can bring their cases to court if they want to, banning the use of forced arbitration. The House has already passed the bill. The Senate is expected to take it up this week. It passed the House with strong bipartisan support, and Senate Majority Leader Chuck Schumer says he expects the same in the Senate, likely passing with no changes before heading to President Biden's desk. New York Senator Kirsten Gillibrand says the bill represents one of the most significant workplace reforms in American history. In Washington, I'm Amy Morris, Bloomberg Radio.
The NFL says it will be investigating new allegations of sexual misconduct leveled against the owner of the Washington football team, Dan Snyder. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. And we're watching a few stories that have to do with New York City.
Yeah, let's start with the story about safety in the city, and they're both related to that. A story by Folak and Ibby about New York City not being able to function if residents don't feel safe. This, according to New York City Mayor Eric Adams. He used his first budget hearing in the state legislature today to push for changes to the state's criminal justice system, urging lawmakers to revise bail laws and guidelines for charging children with gun crimes.
Yeah, the mayor wants legislative action that would allow judges to detain individuals without bail at their discretion, allow for children to be charged in criminal court for gun arrests, and reverse parts of a law that requires prosecutors to turn over all relevant information during trials. And here's what he said during his first Tin Cup Day, a yearly event during which localities plead their case in Albany before the legislature. He said, "We cannot function as a city unless New Yorkers are safe and feel safe on our streets, our transit system, our workplaces, and our homes." You and I have talked about this. You're back on subways, but you know, we both have been back and forth here and saying there are times we don't feel comfortable. We've got colleagues who are on a platform and there's some kind of assault and something. Like, it's been pretty rough during the pandemic as people haven't been, certainly when it comes to mass transit, haven't been riding it as much.
Yeah, there's also this tension between Eric Adams and the most progressive wings of the Democratic Party because of his support for traditional policing and his background as a police officer for so many years. So what he, and I think this was a big part of his election as well, because the more progressive candidates did not end up doing well in the election. And I think a lot of New Yorkers said, wait a second, we want somebody with this background who will come in and help us feel safer.
Meantime, the Reverend Al Sharpton calling on Mayor Adams today to address the brazen thefts at New York City stores, complaining that businesses have been forced to such extreme security that retailers are even, quote, locking up my toothpaste. He was on MSNBC. This is in the New York Post reporting on this and just talking about the thefts that are going on in New York City crime. We've definitely seen an increase. This is Bloomberg.
Connection lost.
stocks, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a number of headlines from the Bloomberg Professional Service. The National Football League is teaming up with Roblox to launch NFL Tycoon to expand its metaverse presence. Right now, we have got shares of Roblox up by 10.4%. IFF is nearing a settlement agreement with Carl Icahn. This according to Dow Jones. Shares of IFF right now higher by 3.4%. IFF International Flavors and Fragrance. Right now, we've got stocks advancing. S&P extending yesterday's broad-based rally. Tech shares recovering about half of their losses this year. The advance gathering pace with the S&P up 62, up by 1.4%. The Dow up 300, higher by 0.9. NASDAQ up 273. That is a gain of 1.9%. 10 years up 6/32. 10-year yield 1.93%. Spot gold up 0.4. 18.33 the ounce. West Texas Intermediate crude up 0.7%. $90 a barrel. Repeating our top story, Federal Reserve Bank of Boston says its next president will be Susan Collins, an economist at the University of Michigan, who will become the first black woman to lead one of the central bank's 12 districts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
4 states, Connecticut, Delaware, New Jersey, and Oregon, have recently announced plans to end mask mandates in K-12 schools. Others may soon follow suit. It's about time. To be clear, there's evidence that masks have been useful in blocking COVID infections in educational settings. But there are also worrying signs that they impose costs on children's social development. With case numbers dropping, it's reasonable to recalculate the balance between the protection masks provide and the difficulties they impose. In doing so, it pays to remember that school-aged children have a relatively low risk of hospitalization and death from COVID, especially if they're vaccinated. For now, and unless COVID resurges in some new form, the potential harm caused by masks seems to outweigh the benefits. States and school districts should rethink their policies accordingly. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we are just about 10.5 minutes away from the closing bell and what's been another busy week for earnings. We've got a bunch coming after the close, including, of course, Walt Disney Company. That's the big one. Uber, Sonos.
Yeah, don't forget about
Mattel.
Sonos. Supply chain questions when it comes to Sonos and Mattel.
And also, as people are getting out in the world post-pandemic, maybe they're not so into buying sound systems and the like, right, for their home.
That's an important question that we're going to ask CEO Patrick Spence tomorrow when we interview him.
We will indeed. All right, we're going to break it all down after the close. In the meantime, let's get some thoughts from our next guest, our Drive to the Close guest, Eric Jackson, back with us, founder, president of the Toronto-based hedge fund EMJ Capital, with us on the phone once again in Toronto. Eric, good to have you back. How are you?
Hey, I'm doing great. Carol, how are you guys?
Doing okay. Exhausted already here in 2022. But that's why we love this world. Hey, we've been doing this a lot. We've been checking in with managers now that we're in a new year. How did 2021 turn out for you guys in terms of performance? Because we know you were like, what, up 100% back in 2020, but curious about how last year played out.
Well, it was a challenging year for sure. I think that the growth and tech stocks in particular probably topped out for 2021 in mid-February. And so we're really almost coming up on a one-year anniversary of that date where, you've had a few pockets in those 12 months where things have rallied back. But it's been a huge correction. So, I don't know, a year ago, basically folks are already anticipating the interest rate discussions that we've been deep into over these last, 4 or 5, 6 weeks. But growth stocks and small cap stocks, the Russell stocks, have really had a hard time. So it's been challenging for sure. It was a big change from 2020, that's for sure.
Well, it's so interesting though, Eric, because like about a year ago we had you on the program, if my memory serves me right, a couple of companies that you talked about. One included Upstart, which finished the year, up 271%. Also, I know you were bullish a year ago on Bombardier. That had a great year, up close to 250%. So were you, talk about your positioning in those if you can, and to what extent that, helped performance for you in 2021?
Both were, big positives for sure for 2021. Both incredibly, sort of tell the tale of the tape of the whole markets, because with Upstart, you're talking about fintech that came public in December of 2020 to really no fanfare. No one was paying attention to it. Its IPO price was $20. Peaked out last year just over $400. Then it bottomed 2.5 weeks ago. I think it was like $74. And now, as of today, it's up to like, I think it was like 110 last time I looked today. So huge moves. So I own Upstart. I own Bombardier. Bombardier was more kind of like a company that was sort of left for dead and had a great run last year, as it proved that the private jet company was not going to default on any debt. And so it's been a lot less volatile in comparison. But positioning wise, Tim, to go through that kind of a drawdown, you have to learn to take profits along the way with some of these big moves. But nothing changed operationally in either business, or in most growth or tech businesses. That's been the funny part of especially the last 3-4 months. Nothing's changed operationally for most of these companies, but the markets basically freaked out. Everything got sold. A lot of these names, were off 50 to 70%. So even today, even though like some of these stocks have bounced like 20, 30% just in the last couple of weeks, there's still, I would say the majority of growth tech names out there that are still majorly discounted. So you have to do your work. You have to look into them, and don't just trust the main narrative that you hear on radio or TV, where you have the people come on and say, "Oh, you can't buy growth or tech stocks in this rising rate environment. I only want to, buy stocks that I can drop on my feet, and value stocks and this and that." Just yesterday, this company Joby, basically a flying taxi company, no revenue, was up 23%. I think it's up another 8% today. So, you gotta do your own homework and make the best decisions for yourself.
So is it easier to be long or short right now?
Easier to be long right now, I would say, for sure, Carol, because, even some of the most beat up stocks, that were easy shorts just maybe like a month ago or 6 weeks ago, have all been levitating. So, you have to watch your shorts. Look at Peloton, for example. That's sort of like a cautionary tale, and
massive
how
squeeze.
You don't want to get leaning too far one way, being short a stock. As of yesterday, I think Peloton was year to date up 6% for the year, while Facebook was down 35%. So go figure.
That's funny. Hey, because we don't think about those two in comparison, right? Hey, for 2022, Eric, wondering about some stocks that you're looking at that you're bullish on. Let's start with National Cash Register, ticker NCR. Why are you optimistic?
Well, it's a pure value play. Most people don't even know it's still a stock, but it's still around. It's got two big businesses, one that caters to kind of retail and restaurants, selling, self-serve checkout machines, that sort of thing. And then another vertical, which is focused on ATMs and banks. And so it's, even though they've totally transformed their business over the last couple of years, and now something like over 70% of their revenues are recurring as opposed to one-time revenues, it's just a really cheap stock, that has sort of been forgotten about. So yesterday they had an earnings call, and they announced that they basically the board is exploring their options. So it's a $40 stock today, or $43. My analysis suggests it's worth over $100 if the pieces are sold off. So that's one where I'm happy to hold it, and I'll wait for things to play out. It seems like the management is kind of throwing in the towel now because they're sort of fed up with being ignored. So that's definitely one that I think is one to watch in 2022.
Well, we always enjoy talking with you and really appreciate it. Eric, thanks. Eric Jackson, founder and president of EMJ Capital, joining us on the phone from Toronto. We've just got about 3 minutes left in today's trading session, bouncing around, but we're kind of just at or just off our best levels of the session, up about 1.4% on the S&P and up 2% on the NASDAQ.
Yeah, I was going to say don't blink because tech stocks certainly have in a day recovered about half their losses since the bottom of late. So.
Yeah, which is he was talking about, Eric was talking about January 24th being maybe the recent low for market. So we shall see. We're going to get a bunch of earnings after the close that might provide some momentum in either way, including the Walt Disney Company. So we're going to be breaking them down for you in just a moment. Right now, we do want to head over to our TV team for Beyond the Bell, our cross-platform coverage, breaking down the market close on radio, TV, and YouTube.
The Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to that closing bell. And here to help take us beyond the bell, it's our global simulcast partners, a very chill Carol Masser and Tim Senovic, bringing together our Bloomberg television, radio, and YouTube audiences. And Carol, it looks like we got not only a pretty good rally here, but we're at the highs of the day. And Tim, I mean, you pointed out earlier that the NASDAQ 100 had actually kind of went back above that 10% threshold, but the NASDAQ composite has now done that as well.
Yeah, that's certainly what I'm keeping an eye on. The NASDAQ 100 is, NASDAQ 100 has recovered roughly about half of the losses of late. So this rally that we've seen has, been really good for tech stocks. We just talked to Eric Jackson, who said the bottom could be,
January 24th.
24th.
Well, I'm keeping my eyes on Disney. It's up about 3.25% ahead of earnings. The magic number, 125.1 million. Will it make it for Disney Plus subscribers?
Do you subscribe to that, Carol?
I do.
Yeah.
Mandalorian fan?
Well, what's really funny is like something big will come out. I watched the Beatles documentary. That was pretty cool. But this is how they get you, right? I mean, they pull out some big release and you sign.
Encanto, unfortunately, is just where
I've heard really good things, though.
Tinder
I've heard great
Swindler.
things.
That's where I'm at.
See, we're all in. We're all in.
How many do we need?
When does the Crocodile of Wall Street get her?
Yes.
I was wondering that, too.
Already 4 podcasts.
I think it's going to be an HBO or Showtime one. I don't know if it fits on Disney.
Well, yeah,
definitely not Hulu.
She's got a lot of Bitcoin.
Yeah, exactly.
Well, she was a content creator herself, so we'll see how much she wants to be focused on that.
Yeah, well, she was more than a content taker, apparently, at least according to authorities here. Closing bells here in New York, and it's going to be pretty much a good day all around, no matter how you sort of slice and dice it. Taylor, I always joke with you here about the breadth in the market, and you always say it's a lot of breadth. I always say not really. You got about 400 plus stocks in the S&P 500 higher here on the day. That's going to give us a boost of about 1.4% to finish the day on the S&P 500. The Dow Jones Industrial Average up for a third straight day, 0.9%, and the NASDAQ Composite, technically now, I guess officially out of correction territory, up about 2% on the day and now only down 9% from that all-time high. The Russell 2000, of course, still in correction territory, but it's ending the day higher here, Carol, by about 1.9%.
Earnings definitely providing some momentum, especially those companies that can price higher and kind of maintain their margins. We're definitely seeing that play out, Taylor, in the trade.
We certainly are. Again, we're counting down just a few more minutes to that Disney earnings. Carol, you mentioned about 3% up during the regular session. Media and entertainment, it is pushing that higher. It's also the second best performer on the day. You're up 2.3%. Otherwise, in some bond proxies, Romaine, you've talked a lot about technology sort of being out of that correction territory. Semiconductor, software services, those are also up anywhere from 2 to 4% on the day. There are only 2 laggards on the day, and it's mostly unch, but if you will, food and beverages, household products. Maybe when we talk about some of the inflationary concerns, this could be it, but you're only off about 0.3%.
All right, let's get to some of the, what
go ahead, Carol.
Okay, some of the gainers. A lot of it's what we talked about after the close yesterday. It's all about earnings. Chipotle up 10%, pretty much closing near its best levels of the session. We saw the numbers, we broke them down. They had a beat when it comes to sales, comp sales, adjusted EPS, topping estimates. They're looking at maybe raising prices, looking at maybe having to raise wages as well, but investors definitely all in, top of the S&P 500. Lyft also up 6.8% in the trade, which is kind of surprising considering the slump that we saw last night. Company reported fewer riders than analysts expected, but the riders that did hop in generating higher revenues, so some optimism there. And Disney, we keep talking about it because it's going to be a big one, up 3.4% here. We're going to be watching a lot of metrics, especially when it comes to their streaming.
Can I just add to your board just real quickly? I mean, we did see that rebound in Meta Platforms today, higher by about 5%. Still still like 39% below that all-time high, and Roblox closed up by 9% today.
Because the NFL and the metaverse, right? Is that where that's where we're all going to go?
That's a thing. Apparently, the NFL.
Content.
We will find out, right? Hey, let's talk decliners here. You guys had a great interview with President and CEO of CVS Health earlier in the day today. Shares finishing down off of earnings, 5.45% on the day. Want to talk New Relic. Shares plunging more than 28%. It's an application software company after the company reported its third quarter results and gave fourth quarter outlook that pointed to flat quarter-over-quarter growth. Analysts were disappointed with the guidance, and we saw a couple of them lower their price targets after that report. And then this is a SPAC that's linked to Rumble. It's called CF Acquisition Corp. 6, down 13.8%. Variety reporting earlier in the day that Joe Rogan from Spotify is not going to take the $100 million contract offer, Caroline, from Rumble, and he's going to stay at Spotify. So the SPAC linked to Rumble is down more than 13%.
Joe Rogan getting a lot of press at the moment. Meanwhile, let's have a quick look at what's happening in terms of your cross-asset performance, because I want to look at what's happening in terms of US dollar on the downside. This is yields fall down. That means you get a bid for your Aussie dollar. You get a bid for overall as well, the kroner and the like. So we're looking at an FX story that particularly is getting in the green because commodities have been in the green. You're seeing zinc up, a lot of the metals, even iron ore in the US trading getting a push higher, even though we saw, of course, some whipsawing over in China, as many had felt that, again, China would be pushing against some of the inflation that we've seen in commodities. But Brent crude up more than a percentage point, seeing the calls yet come in for further in excess of $100 a barrel. We're currently trading at $92 a barrel for Brent crude. So we actually saw commodities get a lift as the dollar was on the downside and helping a lot of those FX pairs. But really the story of the day in your bright green has been, well, the fall in yields that we've seen globally, Taylor.
Yep, and it's green because it's price higher, yield lower. We're at a 195 on the 10-year yield, and I think what's interesting about this is the huge, what Ira Jersey is calling one of the strongest 10-year auctions that he has seen. And so you're really seeing bonds catch a little bit of a bid, but he's also really pointing out that the 197 level is really that key technical level that we hit. We sort of hit that yesterday, and then bonds rallying from there. So this really highlights, again, you guys, the push-pull as we count down to earnings within the growthier space, the impact that yields have on that, and of course CPI tomorrow as well.
Before we get to Disney earnings, I just want to point out big M&A news. Snoop Dogg apparently buying Death Row Records, which I thought was defunct, but I think it had kind of gone through a few things. Terms undisclosed there. It's not a publicly traded company.
What was it? Set up back in, what, 1992 by Dre and team?
Carol has no idea.
Huge fan of the simulcast.
Do you listen to
He
hip-hop,
is. He
Carol?
watches. I saw that on Instagram.
He does.
Yeah.
He also has plenty of investments, whether it be across industry groups. Is a big fan of fintech, so a man that, you know, maybe got some cash to burn. MNRK was the parent company of Death Row at the moment.
Yeah, which apparently was controlled by Blackstone. Which what do they not have their hands in?
Earnings are out.
All right, Disney earnings actually crossing the wire right now. Let's get serious here for a second and take a look at the numbers here. Let's start off here with the parks and experiences revenue, $7.2 billion. That's a beat. The street was looking for $6.13 billion. Media, entertainment, distribution, operating income coming in at $808. Let's get you the headline numbers though here. 1Q revenue, $21.82 billion. The street was looking for $20.85. Adjusted EPS, also a big beat here, 106 versus an estimate of 57 cents. And let's take a look here at Disney Plus subscribers. They added 11.8 million Disney Plus subs in the first quarter here, and I'm just going to get this right here. Subscribers now at 129.8 million. The street was looking for 125. So it looks like, guys, all around, this looks like the headline numbers are beating. You're seeing the shares higher by about 8%.
Meanwhile, they come thick and fast, and Uber seeing its fourth quarter revenue, $5.78 billion. That was a beat versus the $5.35 billion. It's moving off a low base. Remember, of course, Q4 2020 was painful amid, of course, the ongoing COVID issues. There were concerns about Omicron eating into their fourth quarter as well. But they come in at $5.78 billion, about a 50% growth. They are, though, guiding lower than where the street had wanted. Gross bookings for the first quarter will be $25 to $26 billion. The estimate had been for $27 billion. And though overall sounding upbeat that they're moving past overall COVID delivery bookings, 13.4 billion. That's slightly less. So we're perhaps not seeing the stimulus affect some of the ordering in terms of your food as we slowly get more trips happening. 1.77 billion trips made, but the estimate was for 1.87 billion remain.
All right, and back to those Disney's earnings, a big beat. I don't know who was it that brought up Encanto. They actually mentioned that in the press release here.
It's like the first line.
Yeah, basically saying that the launch of a new franchise with Encanto was actually a big part of the reason why they saw a significant significant increase in subscribers to Disney Plus. Let's bring in Geetha Raghunathan, U.S. media analyst for Bloomberg Intelligence, right now to help us break down what we're seeing here. Geetha, what jumps out at you most in these earnings so far?
I mean, the number one, metric that everybody is kind of looking for is obviously those Disney Plus numbers. And as you pointed out, really, really strong numbers. I mean, especially after a pretty lackluster quarter last year when they only had 2 million subs. So again, we're kind of seeing that whole reacceleration play out. And then for me, the other big number was really the park profit number. So, we knew that the parks number was going to be really strong in terms of revenue, but there's been some concerns, there've been some doubts about, whether profitability would be just as strong. And I think I see a $2.5 billion operating income number on the park segment. So really, really strong. That's almost 90% above consensus estimates. So that's a real blowout for me. Not unsurprising. Again, I know Taylor was mentioning this earlier with the NBC Universal numbers. They had their most profitable quarter in the December quarter. So this just reiterates that there is so much pent-up demand out there.
So in terms of the subscribers and the subscription numbers, I think everybody was spooked after Netflix, right? And some concerns about what that would mean for Disney. They obviously hit it out of the park. What's the challenge for them going forward, especially as the economy continues to open up? Good for their parks, right? But people are getting more outside. Can they continue to see these kinds of numbers when it comes to streaming?
I actually think they can. So Disney has, they do have the best production assets. They have the best IP out there in the industry. They have global distribution. They have a great brand name, and they have a really nice economical price point. And what they did this quarter, so the quarter that they just reported, was a really smart bundling strategy. So in terms of reinvigorating the Disney Plus subscriptions, what they did was they added, they gave it away for free along with, a Hulu Plus Live subscription. So that I think kind of really helped that. And then as you brought up, adding Encanto. So again, they have that whole movie content powerhouse with their studio, and they have those levers that they can pull in terms of being able to bring content onto their streaming platform.
Just real quickly, Geetha, do they need Hulu anymore?
They absolutely do. So they own 2/3 of Hulu. Hulu is really a big part of their business. And remember, in a lot of the overseas markets, so in India, they have the Hotstar product, but in a lot of the overseas markets, in the US, it's known as Hulu. It's actually branded, the Hulu product is actually branded as Star all over the world. So, it's absolutely a critical and integral part of their streaming strategy.
Geetha, you talk about the strong subscriber numbers on Disney Plus, the strong top line numbers. They are talking about a bigger than expected operating loss, primarily due to Disney Plus and the costs associated with that. Every analyst on the street is wondering the cost for content, the cost to fund the streaming wars that eventually the bigger the better will win out in the end, and that consolidation is ripe. Is now the time to be appropriately subsidizing those costs, not worrying about that for now? Because if you're looking at the long end, you need to invest now in order to win later.
Yes, I absolutely think that is the right approach. And I think that's exactly the approach that Disney is taking. So they have already spoken about increasing their content expenditure this year, fiscal 2022, by 32%. So it's going up to almost $33 billion. A lot of that, almost $8 billion, is just going to be spent on their streaming product alone. So they are absolutely doubling down. And this is really they are playing the long game. So they knew that they're going to be hurting their fiscal 2023 profitability. But obviously they need scale, and that's what's going to drive the business in the long term. And so they are willing to write those big content checks.
All right, Geetha Raghunathan helping us break down the Disney earnings. They're media analyst for Bloomberg Intelligence. Of course, the big headline here is really those Disney Plus subscriber numbers, 129.8 million. That's what they had at the end of the quarter, well above what the street was looking for. And be sure we're going to have a conversation actually with the Disney CEO a little bit later on Bloomberg Television. Bob Chapek, he's going to be here 5:30 p.m. Eastern Time. That's going to be on the Bloomberg Technology Program with Emily Chang.
Meanwhile, more earnings in Uber bouncing back, we understand. That's what Dara Khosrowshahi, the CEO, is saying. The Omicron variant began to impact their business in late December, but they see mobility is already bouncing back. They recorded the most active users in its history. So Uber currently one to watch in terms of, though, their forward-looking guidance slightly light.
All right, big on earnings. Mattel, too, it's up about 4.5% here in the after hours. It's a beat for the fourth quarter on both the top and bottom line, and also talking about 2022 net sales 8 to 10% higher. So it looks like they managed the supply chain through the holiday season. All right, guys, Twilio's up 24%, Sonos is up 8.5%, and we've got Disney up almost 8% in the after hours. All of these stocks on the move post-earnings, so a lot to play with tomorrow. All right, that's going to do it for our cross-platform coverage on radio, TV, and YouTube. Our Beyond the Bell coverage. We'll see you again same time tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
A lot of earnings and a lot of stocks moving, and I feel like it's to the upside largely.
Yeah, it raises the question about earnings-driven, this earnings-driven market tomorrow, and to what extent we could potentially look at Eric Jackson's comment that, hey, January 24th was the bottom.
Well, I was thinking about our discussion generally with our team over there in terms of what we're seeing in yields kind of coming down a little bit. We have seen a real bounce back off of those lows on the equity markets. Have we found a floor in stocks? Have we found a ceiling when it comes to yields? I mean, this is an environment where it's all about finding what are the levels, the sustainable levels that reflect the fundamentals that are out there, and maybe expectations whether it comes to economic growth, Fed policy, and the outlook for corporate earnings.
Hey, you mentioned Sonos, so I want to give another update there. Shares up 8.8% after the company reported results that beat estimates. The company increased the midpoint of its fiscal 2022 outlook. Revenue beat estimates, and then adjusted earnings per share came in at $1.02 versus estimates of 97 cents. So certainly a beat there. We're going to talk with the CEO, Patrick Spence, tomorrow.
We are indeed. Right now, Disney up 7%, Uber's up almost 9% in the after hours. All right, off to World and National News. Let's check in with Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. Members of both parties are promoting separate initiatives to address the rising crime rates across the country. Bloomberg's Irv Chapman reports on the proposals that were offered today on Capitol Hill.
Ranking Republican Chuck Grassley led off on the Senate side.
What do you think you get when you talk for months and months about defunding police? You demoralize the police.
Democratic Representative Val Demings is a former police chief.
Communities say we want to see more police. And we must invest in our youth today so we won't have to invest in our prisons tomorrow.
Several police organization leaders joined in endorsing a bipartisan House bill that would subsidize police equipment and training, including domestic violence de-escalation and mental health. In Washington, Irv Chapman, Bloomberg Radio.
More states are easing mask mandates. Massachusetts Governor Charlie Baker says masking in their schools will no longer be required beginning February 28th.
People have made a lot of progress by doing all of the work that they've done over the past 2 years to help kids and those who work with them in schools. And today's announcement's another big step forward to safely manage COVID while we get back to what I would describe as the familiar and normal aspects of school and life.
Governor Baker says Massachusetts has been a national leader in the number of students vaccinated. New York Governor Kathy Hochul is lifting the mask mandate for businesses, but keeping the mask mandate for schools. The CDC today said it still recommends masks in areas of high and substantial transmission, which it says is still much of the country right now. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Now back to you, Carol and Tim.
Thank you so much for that update, Nancy Lyons. Let's get a check of all that after-hours action. Here's Charlie Pellet.
Let us begin with the Walt Disney Company. Shares up now by 7%. Disney out with first quarter sales and earnings that handily beat analyst forecasts, boosted by its theme parks. Subscribers to the flagship streaming Disney Plus service jumped to 129.8 million. Again, Walt Disney After Hours up now by just about 7%. Well, the other big earnings report after the close of trading here in New York, Uber up by 8.1% after hours. We are going out more often. We are ordering food more often. Uber reporting revenue for the fourth quarter that did beat the average analyst estimate. So to be sure, Disney up 7%. Uber After Hours up now by just about 8%. Another update on Wall Street. S&P extending yesterday's broad-based rally. Tech shares recovering about half of their losses this year. NASDAQ up 2.1% Today, the NASDAQ 100 index also up by 2.1%. S&P advanced 65, up 1.5%. The Dow up 305, up by 0.9%. 10-year yield 1.94%. Spot gold up 0.4, 18.32 the ounce. And West Texas Intermediate crude oil up by 0.8%, 90.07 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Appreciate that update, watching all of those share prices and earnings in the after hours. And I got to say, this is a story I feel like you can't get enough of.
I cannot get enough of this story, and the story is continuing to unfold. We are, of course, talking about the crocodile of Wall Street, who's been arrested in a $4.5 billion crypto crime. Heather Morgan and Ilya Lichtenstein's world of TED Talk-style speeches and music videos collapsed around them when they were arrested over stolen Bitcoin worth $4.5 billion. As the feds tell it, it's a Bonnie and Clyde for the crypto age. Joining us now is Paulina Cachero, personal finance and investing reporter for Bloomberg News. She joins us on the phone from New York City. Paulina, first I want to get an idea of what exactly officials are saying, authorities are saying that these two did.
So, the Department of Justice, arrested the couple on charges of, a conspiracy to launder about $4.5 billion in stolen crypto. They allegedly kind of stole, all of this Bitcoin during the 2016 hack of Bitfinex, which was a cryptocurrency exchange. And they were arrested yesterday in Manhattan.
All right, who are these people? This is what we all want to know. It's a meme, we know. We're seeing that all over the social universe. But who the heck are they?
Yeah, so, obviously, professionally, the couple had kind of branded themselves as these tech entrepreneurs and investors. Heather Morgan actually wrote columns for Forbes and Inc. magazine, and Lichtenstein kind of claimed to be a co-founder of MixRank, which was a startup that was backed by a Y Combinator. However, a closer look at their social media accounts kind of revealed this really brazen and audacious lifestyle, which, we kind of call the crypto age Bonnie and Clyde in our story. So Morgan had this pretty wild alter ego that she called Razzle Khan, which is a stage name for this rapper and surrealist artist. She released several singles and music videos under the stage name, including one for her song Versace Bedouin, in which she refers to herself as the crocodile of Wall Street. She was pretty active across a bunch of social media platforms. On TikTok, she was, freestyle rapping about meme stocks. And she even gave a talk about how to social engineer your way into anything with this talk series called NYC Salon. Interestingly, the talk was all about how to manipulate people into divulging information or taking certain action to kind of, increase your stature in life. And she bragged that she was able to get into exclusive parties with
we're getting to a point.
CEOs.
Do you feel like we're getting to a point, though? Forgive me, TED Talks, because I love them, but it's like, can anybody get a TED Talk?
Wow, Carol.
Sorry. I mean, it begs the question. Anyway.
Well, it does actually raise the question about about blogging platforms and to what extent they allow people to actually publish on these platforms. Hey, I wonder about where they were in the crypto universe. We had on Quick Take Stock earlier today, we talked to Stefan Willett from Front Financial, which serves institutional clients in the crypto space. He said he'd never heard of these people, and they weren't in his crypto universe. And I'm wondering, Paulina, what you're hearing from your sources about where these people were.
And I think that's kind of one of the biggest criticisms around the crypto space. No one really knows. They obviously had pretended to be these big tech investors, and were at least Morgan was very active about commenting on cryptocurrency, about how to protect yourself from, cyber criminals. A piece that she wrote, I believe, for Forbes. But, it's not really clear, what their involvement was in the crypto space. And I think that raises a lot of questions about, this emerging market in general, where, we have these wallet addresses that are, anonymous, and who do we know is making these transactions? It's pretty unclear right now, and obviously they claim to kind of run these B2B software service companies, but we'd love to take a closer look at what they were doing.
To be fair, it wasn't a really official TED Talk. It was a TED Talk like. So forgive me.
Yes, it was a live speaker series in New York, and apparently she started the talk with a rap, which we saw in a video on YouTube. So
it's just interesting. And I mean, what are the questions as you report this out and, more is coming to light about what happened here? And obviously, law enforcement is now involved. What are the questions that you have that are top of mind so that we kind of understand what happened? Because we know the crypto space is exploding and it's becoming much more legitimate. But, it makes you wonder kind of how this played out.
Yeah, I think a large conversation that is happening, in this space is, how and when are regulators really going to step in? These defendants, the U.S. government claimed to be sophisticated cyber criminals and money launderers, and the way in which they were able to transfer the stolen Bitcoin into their own personal accounts was really, really complex. So, I think there's a lot of discussion about, how to regulate the space. And I think that's something that we're looking at closely. We'd love to see how the Department of Justice kind of builds their case.
It's really interesting, Paulina, seeing the response from the crypto community to this. And again, I'll go back to Stefan Willett, who earlier in the day on Quick Take Stock said that this is a real win for the crypto space because the feds were able to recover at this point $3.6 billion worth of that crypto. And it goes to show that, even though people have this impression with cryptocurrency that it can't be tracked, well, the federal government was able to do that.
Right.
Do you believe it legitimizes the space at all?
Yeah, I think so. I think historically, there's been a lot of criticism of legislators kind of being slow to, kind of regulate these emerging markets and, not just in the crypto space, but, as we're seeing with all of the questions around antitrust laws. And it's great to see that the Department of Justice is, able to step in and, file charges in this case. And I think that it definitely, gives, some hope to, crypto traders and other retail investors that there, may start to be some protections, from the U.S. government moving forward, hopefully.
Hey, just quickly, got about 30 seconds. What's next for these individuals?
What's next? So I believe they were detained, and overnight a judge in Washington granted an emergency request by the U.S. government to hold them in jail ahead of their trial. So I guess we'll just have to wait and see what happens with the trial, which will be held in Washington.
It's fascinating. I'm just thinking it's a funny day where we're talking about Disney and content and streaming, and I'm like, here's another thing that's like fodder for a series.
Not
it's
on
reality.
Disney. This is going on HBO or Showtime. Paulina Cachero, personal finance and investing reporter at Bloomberg News, joining us on the phone from New York City. Thank you so much for that. Carol, I think one thing that's really fascinating about this is they're each being represented by their own counsel. They're not sharing counsel.
Yeah.
And that would indicate that they're taking separate strategies from one another in order to defend themselves, which I think is really notable.
Yeah, I think that is important in terms of how they're approaching this. My guess is we're going to be talking a lot more about this. All right, you're listening to Bloomberg Business Week. Carol Master, Tim Stenovic. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, it is a busy Wednesday. Coming up, we've got a really interesting guest, and I feel like it fits so many different things we're talking about. U.S.-China relations. We also just got the Oscar nominations this week. Disney earnings. So looking forward to the author of a new book. It's called Red Carpet, Hollywood, China, and the Global Battle for Cultural Supremacy. We're going to talk with him in just a moment.
Yeah, Eric Schwartzel is Hollywood reporter for the Wall Street Journal. He's going to be joining us in just a couple of minutes. In the meantime, though, Charlie Appellate has been watching that aftermarket hours action closely. What's going on, Charlie?
What's going on? We got Disney. We got Uber. We are all over all these reports. Disney right now, DIS on the ticker, up by 8.6% after hours. Disney out with first quarter sales and earnings that handily beat analyst forecasts. It was boosted by its namesake theme parks. Subscribers to the flagship streaming service, Disney Plus, jumped to 129.8 million. It also reported adjusted EPS and revenue that topped analyst expectations. Geetha Raghunathan is a media analyst for Bloomberg Intelligence. She's all over the report for us.
I mean, the number one, metric that everybody's kind of looking for is obviously those Disney Plus numbers, and really, really strong numbers. I mean, especially after a pretty lackluster quarter last year when they only had 2 million subs. So again, we're kind of seeing that whole reacceleration play out.
And just over an hour from now, we will be speaking with Disney CEO Bob Chapek, 5:45 p.m. Wall Street time. Uber also out with earnings after the bell, reported revenue in the fourth quarter that beat analyst estimates. Uber shares driving higher now by a 6.7% as Wall Street hails that report. Wall Street also looking ahead to tomorrow morning's consumer price index. It is expected to show inflation continues to overheat, potentially stoking bets on a more aggressive Fed liftoff in March. Christina Hooper is Chief Global Market Strategist at Invesco.
Well, I think there's just a lot of doom and gloom talk about this print. So I think there's more upside potential than downside potential.
And indeed, we saw upside on Wall Street today with the Dow, the S&P, NASDAQ all advancing. S&P up 65, up 1.5%. The Dow up 305, up 0.9%. NASDAQ up 295, up 2.1%. S&P extending yesterday's broad-based rally. Russell 2000 up again today, up by 1.9%. 10-year yield 1.94%. Spot gold up 0.4%, 18.32 the ounce. Cannot ignore crude. $89.95 a barrel on WTI, up by 0.7%. I'm Charlie Pellet. Busy after hours. That's a Bloomberg Business Flash.
Yes, indeed. And a lot of stocks and companies, their share prices on the move, as Charlie just mentioned. This next guest is definitely a timely guest. I think about the Olympics that are on. We see the Oscar nominations this week, and we see tensions between the U.S. and China, Tim, on a lot of fronts as they battle for influence, whether it's in politics, on the global stage, the global economy, military might, technology. There's a battle, and that also includes the movie business.
Yeah, it certainly does. It's been pretty remarkable how quickly China has been able to get to build out its version of Hollywood in China. And it's something that Eric Schwartzel, Hollywood reporter at the Wall Street Journal, dives into. He joins us right now on the phone from Los Angeles. Eric, how are you?
Hi, I'm happy to be here. Thanks for having me.
Congratulations on the new book, Red Carpet, Hollywood, China, and the Global Battle for Cultural Supremacy. Your book opens with an anecdote about a group of executives from China coming to the United States all the way back in, well, not that long ago, 2008. They were there to learn from Hollywood executives, some of these executives having run companies that are, 100 years old. How quickly has China been able to build out its movie business, its entertainment business since that time?
It has done in about a decade and a half what it took Hollywood 100 years to do. I think a lot of listeners might be familiar with the concept of technology transfer that we see in a lot of sectors when it comes to China. The idea being that if you want to invest in China, or if you want to do business in China, you might need to show them how it's done. You might need to hand over airplane blueprints or partner with a state-backed company that might want to learn how to sophisticate their operations. Well, the same thing happened in Hollywood and the movie industry. As Hollywood moved into China, China started to observe how Hollywood operated, sometimes in a literal classroom, like you referenced, and sometimes just by hiring talent and bringing them over to show them how to make commercial films. And since then, we've seen the Chinese film industry just take off, and movies there routinely gross upwards of $500, $600 million in China alone. And now we're trying to see also this sort of final leg of the race, which is exporting those movies abroad, as America has done for decades as well.
You know, it's interesting on a day when we're reporting Disney earnings, I think about the role of these big global companies, including a Walt Disney, their role in terms of helping out China maybe move forward when it comes to movie making. How do you think about, how do you write about a company like Disney and their role in all of this?
Disney is a fascinating case study because it spent the past 25 years going deep into China. At one point, Bob Iger, the former CEO, described the Shanghai Disneyland park as the best opportunity for the company since Walt Disney himself had bought land in Central Florida. I mean, this was a country of 1.4 billion people, a lot of whom had children and a lot of whom had only children. So, I mean, if you're operating Disney's business, you know, a nation of a bunch of only children is about as, a dream scenario as you can get. However, we've seen some of that success turn into something of a liability because there is a massive theme park in Shanghai and there's another one in Hong Kong, and the movies do exceptionally well. However, it's just gotten trickier to do business there overall. Not just because under Xi Jinping, doing business in China has grown more opaque, but also because in some cases it has put Disney at odds with its own American government.
Well, what has Disney had to give up in order to operate successfully in China?
Well, I mean, so let's start with the theme park in Shanghai. Disney is not a majority owner of that park. Like a lot of other business ventures in China, it had to partner with local firms and give them majority ownership. So that means that I think about 45% is owned by Disney and the rest is owned by companies that are local and state affiliated. And there were other issues with Disney's strategy. The first being that, you know, in the mid-1990s, when Disney first started looking at building a theme park in China, Chinese officials wanted it right away. And Disney had to say, whoa, you know, there's a reason we only have 4 or 5 of these things in the whole world. We don't just build a theme park when someone asks for it. We have to start to seed affection with children, so they beg their parents to take them to that theme park first. And they initially wanted to get the Disney Channel onto Chinese Airways.
Right.
Government officials in China said no, but they did have other more creative ways to introduce Chinese children to Disney characters, including for a time a string of English language schools that would teach the ABCs and the Disney characters.
Eric, we're going to come back, continue the conversation. We're talking with Eric Schwartzel, author of the new book, Red Carpet. We'll continue in just a moment. Let's get over to Nancy Lyons in D.C.
Thanks, Carol. President Biden has been meeting with the heads of the country's biggest utilities this afternoon to discuss aspects of his Build Back Better agenda. He says his proposals would create jobs and make the nation's power grid more resilient to extreme weather. He says those in control of the U.S. power grid play an important role in the country's push for a clean future.
CEOs know exactly why clean energy future matters. It's an incredible opportunity for our country, and they know how urgent it is to get this done. And they've been key partners throughout this entire process.
Biden says companies are betting on a clean energy future, and the world is betting on American workers to build it. The first batch of U.S. troops meant to bolster NATO's eastern flank has reportedly arrived in Romania. Colonel Joe Ewers is with the U.S. Army 2nd Cavalry Regiment.
The important mission of these soldiers is to clearly demonstrate our strong commitment to our allies.
Ewers says these troops are the centerpiece of the arms team that's moving into Eastern Europe as Russia lines up along Ukraine's border. Currently, the Pentagon says there are no plans to use the U.S. military to evacuate Americans from Ukraine. Officials say Americans have had ample opportunity to leave Ukraine in an orderly fashion. A second man has pleaded guilty in an alleged plot to kidnap Michigan Governor Gretchen Whitmer. The plea today from Caleb Franks leaves 4 other men to face trial in March. and gives prosecutors a second insider who could be a key witness. The government says the six wanted to kidnap Whitmer because of their disgust over COVID-19 restrictions. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Masser, Tim Stanovic here in our Interactive Brokers studio. We're going to talk about Joe Rogan, aren't we?
Yeah, this story coming from Variety. They were first to report that Joe Rogan said that he is not planning to leave his Spotify deal. You may remember a couple days ago, the platform Rumble offered him $100 million over 4 years to leave Spotify and come do his podcast on Rumble. Well, he's saying he didn't do that, and it was one of the SPAC tied to Rumble, which was one of my decliners
We talked
today.
about it today.
Yeah, it moved higher earlier this week, but lower today as a result of this news.
Well, sure, if they were right and he was going to come, that could be a big boost to that platform, which is why Spotify wants to hold on to him, because controversial or not, he brings a huge audience along with him.
Huge audience. And he came at a huge price for Spotify. It was a really big deal just at the height of the COVID pandemic when Spotify signed Joe Rogan to this deal. The question is, Carol, is to what extent does the controversy surrounding not just Joe Rogan's recent controversy about vaccine misinformation and giving a platform to who many people would say are anti-vaxxers and not necessarily based on the science, as well as his previous episodes where he's used racial slurs, does that hit Spotify's business model?
Well, and last Friday, Spotify pulled 70 episodes of his show.
Until it wasn't quiet.
Yep, and they were from 2009 to 2018, and they said they did at the request of Rogan and his team after talking about racially insensitive language. It's an interesting time, and I'm thinking about, here we are talking about U.S. and China and content produced by U.S. companies over in China, and we're going to get into this a little bit about censoring that's being done, whether it's on a movie poster or something specifically in a movie. Is it catering to a market and being sensitive, or is it censorship? And what's the responsibility of a company who wants to grow in that market, but do they have leverage to push back against China?
Yeah, and at the heart of it, it's all a business story, right? Because that's where companies see the opportunity. They see opportunity with Joe Rogan, and companies see an opportunity in China as well.
It's a tough thing, and it's a tough balance, and we're seeing it play out a lot.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Disney works its magic. Shares up almost 10% after hours. The conference call is underway. We're monitoring it on Bloomberg Live. We've got Disney's Bob Chapek reiterating the 2024 Disney Plus subscriber forecast. We will be talking to the Disney CEO 1 hour from now, right here on Bloomberg Radio and Bloomberg Television. Disney, by the way, reporting first quarter sales and earnings that handily beat analyst forecasts. Disney up now by 9.9%. Also out with earnings after the bell, Uber Technologies. It reported revenue in the fourth quarter that beat analyst estimates as it recorded the most active users in its history. Uber right now up by 5.6%. The Dow, the S&P, NASDAQ all advanced today. We had the S&P 500 index up 65 points, up 1.5%, extending yesterday's broad-based rally. Tech shares have recovered about half of their losses this year. The NASDAQ 100 index up today by 2.1%. NASDAQ Composite Index up 2.1%, higher by 295 points. The Dow up 305, higher by 0.9%. 10-year yield 1.94%. Spot gold up 0.4%. 18.32 the ounce. West Texas Intermediate crude up 0.7, 89.98 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. I want to get right back to Eric Schwartzel, Hollywood reporter for the Wall Street Journal, also author of the new book. It came out yesterday. It's called Red Carpet, Hollywood, China, and the Global Battle for Cultural Supremacy. Eric joins us on the phone from Los Angeles. Eric, I want to talk about Maverick's jacket. And I'm talking Tom Cruise Maverick here. This book is full of so many great anecdotes. I had no idea about the controversy or self-censorship surrounding this patch here. But explain the story and how self-censorship is embodied in what Paramount has done for the reboot of Top Gun.
Right. It's one of the most iconic movie star costumes of all time, right? The sunglasses and the leather jacket that Tom Cruise wears in Top Gun from the 1980s. And when Cruise suited up for the reboot that I think is now coming out this year, if not next year, it's been delayed a couple times because of COVID, people noticed a key difference on that jacket, which is that the flag patches that were on the back had in the 1980s included the flags of Taiwan and Japan, but in this reboot, they were gone. And the reason why I discovered is because Chinese financiers who were helping pay for the film pointed out that those could be a problem because a Taiwanese flag implies that Taiwan is its own country, a geopolitical stance that Beijing disagrees with, and tensions between China and Japan have always been charged. And so maybe while the costume designer was at it, they should take that patch off as well. And so suddenly you had this movie that in the 1980s symbolized, frankly, Reaganism on screen, rah cinema, instead bending to Chinese rules without China really even having to say a word. That is, I think, one of the striking things about China's relationship and influence on Hollywood is that we're at the point now that China doesn't even really need to say anything for Hollywood executives to know what lines not to cross.
Well, you also write in the book, audience in China are reminded every time they go to the movies that what they are about to see has been approved by their government. And one of the things I think we praise or embrace big time is that when it comes to art, in so many different forms, including the movie industry, that is an opportunity for directors, writers, producers, actors, actresses to put out lots of different points of view freely. It's very different in China. But American companies, global companies, have agreed to kind of play by Chinese rules. Is that fair?
Absolutely. And the business behind it makes it something of an economic no-brainer for a lot of the studio chiefs because the Chinese box office has grown so quickly at a time when the U.S. box office has flatlined. Maintaining access to that market is really about maintaining access to growth. And to get into the Chinese movie theaters, as so many studios want to do, they have to pass censorship by Chinese Communist Party officials. So every major movie that is trying to get into Chinese theaters has to be first viewed and approved by these Communist Party censors. So that means not just removing, maybe some little detail that, or a line of dialogue that Chinese censors don't approve of, but also just avoiding whole topics altogether, like Taiwan or Tibet or aspects of Chinese history that its leaders would rather not see on screen.
What is lost here when it comes to self-censorship, when it comes to making sure that movies that are made by American studios don't offend audiences globally? Or I wouldn't even use the word offend, but adhere to what that government sees as its own values.
Well, you alluded to this a little earlier, and I think it is a change for what we've come to expect Hollywood to do. I mean, since the 1960s and 70s, Hollywood has been the industry that is supposed to push the envelope and sort of stand as the American industry of free expression. And increasingly, especially in a global marketplace, that has not really been possible. And so not only do we see certain political concerns or stories taken off screen, but we also see really an undercutting of certain representation. For instance, in China, storylines involving gay characters are all but forbidden. So that's not going to fly in major blockbuster movies. But I think in general, what we're seeing is that for the first time in Hollywood's 120-year history, it is not making movies with Americans first in mind, but many times with Chinese censors.
Wow.
So how do you report on this world, how do you kind of put it up against the increased tensions that we're seeing between China and the rest of the world, and certainly between the United States? And being in an environment coming off of George Floyd and the pandemic, where we're saying, wait, there's inequalities, there's inequities, there's a lack of diversity and inclusion, there's racism out there. Corporate leaders, you need to stand up. We all need to stand up to make it a better system. How do you cross that with what you write about?
It's the tension that I think has also enveloped entities like the NBA, which has also waded into Chinese politics and faced similar criticism. Sort of is there an hypocrisy there that actors or athletes who are so willing to engage on social issues domestically won't engage on them when they are Chinese in nature? I think that hypocrisy has really rubbed a lot of consumers and politicians the wrong way. And as tensions between the U.S. and China rise, and I'd also say, maybe even more importantly, as awareness of human rights abuses in China rise, then I think these companies and these athletes or these actors are going to have more to answer for. And we have yet to see what that public pressure leads to. Because so far, anytime there's something of a flare-up, it fades from memory rather quickly. And I think the calculation for a lot of business leaders has been the PR hit at home will fade faster than any punishment I face in China. So just take the PR hit as long as you can maintain access in China. Well, I don't know if that dynamic will shift.
Well, just look at all the corporate sponsors that are over
at the Olympics.
And part of the Olympics.
Eric, exactly right.
Such a timely conversation. We really appreciate it, and good luck with the book. Eric Schwartzel, Hollywood reporter at the Wall Street Journal, on the phone from LA. Check out his new book, Red Carpet, Hollywood, China, and the Global Battle for Cultural Supremacy. This just crosses so many different conversations and themes that we're having right now.
Well, speaking of themes, we're doing sports for the rest of the week. You and I are headed to the airport right now. We're going to get on a plane. We're going to go to LA. We got the Power Players Summit on Friday.
Yeah, we're going to be programming from there. Lots of great guests, team owners, you name it, cutting and dicing and slicing the world of sports just ahead of the big game on Sunday. For Tim Stanovic, I'm Carol Masser. Have a good evening.